What if the biggest risk to markets isn't inflation, recession, or even war? What if it's investor complacency? Today on American Trade, we're breaking down the biggest developments in the economy, Federal Reserve policy, geopolitics, and financial markets. Let's dive in. The U.S. economy continues to show mixed signals. Consumer spending remains resilient, unemployment remains relatively low, and corporate earnings have generally exceeded expectations. However, warning signs remain. Credit card debt remains elevated, commercial real estate faces ongoing pressure, government debt continues climbing, manufacturing activity remains uneven. The economy is not collapsing, but it's not firing on all cylinders either. This leaves investors asking one question: can growth continue without reigniting inflation? The Federal Reserve remains the most important player in financial markets. Investors are watching closely for clues on future interest rate decisions. The Fed faces a difficult balancing act. Cut rates too early and inflation could return. Keep rates elevated too long and economic growth could slow significantly. Markets continue to react to every inflationary report, employment numbers, and federal statement. For investors, Fed policy remains one of the most important factors driving stocks, bonds, gold, and cryptocurrency. Global tensions continue to influence markets. Key concerns include U.S.-China trade competition, supply chain security, energy markets, regional conflicts impacting global commerce. When geopolitical uncertainty rises, investors often seek safety in assets such as gold, U.S. Treasury, defensive stocks. Meanwhile, energy prices remain a key variable that can quickly affect inflation and economic growth. The stock market continues to push higher despite concerns. Technology and artificial intelligence remain major drivers. However, some analysts warn that valuations are becoming increasingly stretched. Investors should remember, markets can remain optimistic longer than expected, but risk management remains essential. Diversification, disciplined investing, and long-term thinking continue to outperform emotional decision-making. Alternative assets continue attracting attention. Gold remains a popular hedge against uncertainty. Silver benefits from both industrial demand and monetary demand. Bitcoin continues to gain attention as institutions expand participation and digital assets. Supporters see these assets as protection against currency debasement and growing government debt. Critics argue volatility remains a significant risk. Either way, investors are paying attention. The economy remains resilient. The Federal Reserve remains cautious. Geopolitical risks remain elevated, and markets continue climbing the wall of worry. The question isn't whether uncertainty exists. The question is whether you're prepared for it. If you enjoyed this analysis, subscribe to American Trade and hit the notification bell so you never miss a market update.